Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone, it's been another exciting week. The market has kind of cooled down a little the last couple days. Some people might be wondering why specifically. On Monday, there was a bill that came through from the Senate sponsored by Senator Elizabeth Warren, and it would basically put pretty erroneous requirements on like node operators, validators, wallet operators, and pretty much DeFi projects to KYC people. They're trying to push it through as part of the Bank Secrecy Act, the BSA Act, which is the part of the U.S. law that kind of requires AML and all the other things that protect us from terrorist financing. Most are kind of seeing this obviously as an overreach of the BSA because you're basically saying, hey, we're going to apply banking laws to software. And most are worried that this could get attached to a larger bill and could get passed somewhere in the Senate. So what people are saying out in the streets is that if you care enough, call your senator, tell them that you don't really agree with this bill because it is going to hamper the technology in this country. So unfortunately, that has definitely brought down the market. But we had a fairly stable CPI print yesterday. Today we had another FOMC meeting. In more macro world news, El Salvador's regulator approved the government to issue their volcano bonds, basically the Bitcoin-backed bonds that were using Bitcoin that was acquired through renewable energy, such as their volcanic activity. Those are expected to launch next quarter, so it should be pretty cool. El Salvador is already a country that uses Bitcoin as legal tender. But I've got some specific tokens, as always, to talk with you guys this week, so we will just start. Okay, so first up is Synthetics. So last week, the decentralized futures product Synthetics officially voted through changes that stopped emissions from new SNX tokens from going to stakers. So basically, in the past, SNX kind of incentivized activity using emissions for people that staked the SNX token and used the platform. They've decided that they want to end inflation on their token for now, that the project has gotten to a point where the activity and the revenue that they have is sustainable enough that they won't need these emissions to get users to use them. To combat the inflation, they're actually going to be adopting new strategies, including a token buyback and burn program that's going to use 50% of any protocol fees that they earn. A note though that these token buybacks are only going to apply to the version of Synthetics that's released on Base, whereas Synthetics is now released on Optimism, Ethereum mainnet, and Base. There might be one other which I'm forgetting. Other disinflation strategies are going to be part of Synthetics' upcoming Andromeda release, including deploying V4 of Synthetics' core and perp software on Base. Basically, and they're also going to be enabling USDC transactions on Base and a bunch of other little changes that's basically going to make Synthetics a truly multi-chain project. The move away from the inflationary rewards, I think, is actually particularly interesting here because Synthetics was actually the first project to really pioneer liquidity mining or yield farming in late 2019 into early 2020. Basically, they started off as a project called Haven with 2 Vs. And they were a payment project. And as they kind of grew and got into providing synthetic assets and some other stuff, they realized that there was maybe a niche or more room to grow as a project that offered synthetic assets or futures trading. So exciting stuff. We will see how this goes for Synthetics. The token is up already 18% for the week. Okay, up next is KuCoin. So yesterday, the KuCoin exchange, a centralized exchange based out of Asia, they've agreed to ban New York customers and pay $22 million as part of a settlement for a lawsuit brought by the New York AG this past March. So the suit basically accused KuCoin of operating as an unregistered exchange. We've heard this all before, not licensed as broker-dealer, et cetera, et cetera. So most of the settlement money is actually going to go towards refunding New York customers, while the remaining $5 million is going to be paid as a fine. KuCoin, which is actually organized off shells in the Seychelles, is now going to be required to cooperate with U.S. law enforcement moving forward by proving information or freezing assets. providing information or freezing assets. So yeah, again, interesting. We're still studying some of these settlements. For some shocking reason, KuCoin is up 47% on this. I would like to note, though, that despite having a large market cap, the token is got pretty low liquidity. I think their market cap is about 200 or 300 million, and they only trade about 11 million of volume a day. All right, next up, we're going to talk about, that is definitely out of order. All right, we're going to talk about this one, IMX. Okay, cool. So IMX is a gaming-focused layer 2 solution. I've definitely talked about them before. They're focused on bringing games onto their chain. They offer, much more scalability. They've offered cheaper mints over the years. So basically this last week, they released a slew of announcements. The first announcement was related to Beam, which is formerly known as Merit Circle, which is going to be launching Sphere, an NFT marketplace, as the initial product for Immutable's ZK EVM product. So back up for if you haven't been paying attention. Immutable is basically working with Polygon on their Polygon created this ZK EVM product. It's basically a layer 2 solution that is separate from both of their IMX chain and Polygon chain. And the idea is that it is an EVM chain, which means that it's smart contract compatible. So projects don't have to recode their entire code base to launch on this specific chain. But the design of it and the partnership between IMX and Polygon is designed to really be this gaming powerhouse. So the ZK EVM product is very important specifically for gaming. So Immutable also announced that the ZK EVM testnet launch is going to. They announced that they've launched the testnet, which indicates that the mainnet launch could be coming to the market very soon. Finally, IMX also announced a partnership with Web3 payment provider Transact, who will be the primary payment solution provider for Immutable's ZK EVM. So all great things, all doing insane stuff. IMX has been just on a tear the last month, but it is up 51% this week. Okay, last but not least, I could not help but talk about Jito. I'm sure everybody has been chit-chatting about it here. So last week, Jito, a liquid staking protocol on Solana, launched its token to much fanfare. The token was airdropped to about 10,000 early users. Jito is very similar in design to Lido, the largest liquid staking protocol on Ethereum, whereby a user can stake their asset, ETH or SOL, and earn a liquid staking token, LST for short, in return. So both Jito and Lido have their liquid staking token rebased daily to basically account for any newly accrued staking rewards. The big difference though between Lido and Jito is that the Jito protocol developed a node software that allows its nodes to use MEV strategies. I think I talked about MEV last week or the week before, but basically you're essentially earning more fees as a node validator by either doing arbitrage trades of some sort, or you're ordering transactions in a certain way. Well, you will earn more fees. And basically it increases the yield over the base yield that can be earned on Solana. So pretty cool. That's been the big differentiator for them over the other liquid staking protocols in the market. So the token was airdropped. Airdrop was really, really anticipated, and it has really just been on a tear, traded up since its release. It is up over 70% since the release. I want to put a damper on this, though, that despite the successful release, the JTO token is likely trading a little bit more around hype than hard numbers right now. For context, Jito's TVL is 444 million, and the fully diluted value of the project is 2.8 billion. Lido, in context to that, their TVL is over 20 billion, and they have a fully diluted valuation of 2.8 or 2.1 billion, which is less than Jito's 2.8. So that is the story on Jito. But that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.